I paid $800 more in taxes than I owed, and the IRS never said a word. 3 years ago, I filed late, missed 2 deductions I was fully entitled to, and walked away thinking that's just how tax season worked. It wasn't. And if you're not doing these 7 steps, there's a good chance the same thing is happening to you right now. The IRS estimates Americans leave over $1 billion in unclaimed refunds on the table every single year. Not because the rules are complicated, because people just aren't prepared. Today, we're going through 7 simple steps to get your taxes ready before the deadline. Steps that can genuinely save you hundreds, sometimes thousands of dollars. Let's get into it. Number 1, gather all your income documents first. Before you do anything else, collect every piece of paper or digital form that shows money coming in. That means your W-2 from your employer, 1099s if you freelanced or did any side work, interest statements from your bank, and if you sold investments, your 1099-B from your brokerage. If you rented out a room or drove for a gig platform, that income counts too. Here's what most people miss. The IRS already has copies of most of these forms. If you leave one out, they will catch it. Do yourself the favor of matching what you report to what they already know. Simple fix. Create a dedicated folder, physical or digital, right now. Every document that arrives in January and February goes straight in. No sorting required yet. Just capture everything in one place. Number 2, know which deductions you actually qualify for. For 2024, the standard deduction is $14,600 for single filers and $29,200 for married couples filing jointly. For most people, that's the right call. Take it and move on. But here's where money gets left behind. If you have significant mortgage interest, charitable donations, state and local taxes, or large medical expenses, itemizing might put more back in your pocket. Quick gut check. Add up your mortgage interest statements, donation receipts, and state tax payments. If that total exceeds your standard deduction, itemize. If not, just take the standard and don't lose sleep over it. Number 3, don't forget above-the-line deductions. They reduce your taxable income no matter what. This one surprises people every single year. Even if you take the standard deduction, there are certain deductions you can still claim on top of it. These are called above-the-line deductions, and they directly lower the income the IRS uses to calculate what you owe. Student loan interest, up to $2,500, is one. Contributions to a traditional IRA are another. If you're self-employed and paying your own health insurance premiums, those are deductible. Teachers spending out of pocket on classroom supplies can deduct up to $300. None of these require itemizing. They just require knowing they exist. Spend 5 minutes running through the list. It's worth it. Number 4, maximize your retirement contributions before the deadline. Here's the move most people sleep on entirely. You can still make a traditional IRA contribution for the 2024 tax year, all the way until April 15th. The contribution limit is $7,000 or $8,000 if you're 50 or older. And if you qualify based on your income, that contribution can be fully tax deductible. Think about what that means. You can lower your taxable income by up to $7,000 just by moving money into a retirement account you were already planning to fund. It's one of the rare moments where doing the right thing for future you also cuts your tax bill today. If you have a health savings account, the same rule applies. HSA contributions are tax deductible with the same April 15th deadline. Number 5, check whether you qualify for tax credits, not just deductions. Credits are better than deductions. A deduction reduces the income that gets taxed. A credit reduces the actual tax you owe, dollar for dollar. Here are 3 that people routinely miss. The Earned Income Tax Credit is available to low to moderate income workers, and the maximum credit for 2024 is over $7,600 for families with 3 or more children. If your income dropped this year, job change, parental leave, anything, check whether you qualify. The income thresholds are higher than most people realize. The Savers Credit rewards you for contributing to retirement accounts. Depending on your income, it's worth 10 to 50% of what you contributed. And the Child and Dependent Care Credit helps offset costs for daycare, after-school programs, or caring for a dependent adult while you work. A few minutes on each of these can swing your refund by hundreds. Don't skip them. Number 6. Decide early whether you're filing yourself or using a professional. If your situation is straightforward, a single W-2 standard deduction, no investments sold, IRS Free File handles it well at no cost for anyone earning under $79,000. But if you have self-employment income, rental property, sold stocks or crypto, went through a divorce, or had any unusual income event, it is worth paying for a CPA or enrolled agent. Average cost is $200 to $500. A good one routinely finds deductions that more than cover the fee. The key is making this decision now, not April 13th. Accountants book up fast in March and early April. If you're going the professional route, reach out this week. Number 7. Have a plan for what comes after, the refund or the bill. This is the step most tax guides skip entirely. If you're getting money back, a refund means you overpaid throughout the year. Consider adjusting your W-4 withholding so more of that money stays in your paycheck monthly where it can work for you. Then put your refund directly toward high-interest debt or your emergency fund before it disappears into your checking account. If you owe money and can't pay all at once, the IRS offers payment plans. Set one up proactively rather than ignoring the bill. Penalties run as high as 5% per month on what you owe, and that adds up fast. Either way, use this moment to adjust your withholding or estimated payments so next year doesn't catch you off guard. Tax season doesn't have to be stressful if you treat it as a process rather than an event. Gather your documents, know your deductions, claim every credit you qualify for, and make a plan for whatever comes next. The people who stress the least at tax time are always the ones who started earliest. This video is for educational purposes only and does not constitute financial advice. Tax rules change and everyone's situation is different. Always consult a qualified tax professional before making decisions about your specific circumstances. Your action step for today: open a new folder right now on your phone, your desktop, wherever. Label it Taxes 2024 and spend 20 minutes tracking down your income documents. That one step puts you ahead of most people filing this season. If this helped you feel more prepared, hit subscribe. We cover practical money moves like this every week.